let's get into our pharmaceutical sector discussion with our guest who's in the hot seat. As I said, Karsten Wellner, the CEO of Ascendis Health. This is a new format that we're deploying for the Hot Stocks shows, and you are our first ever captain of industry to sit in that seat.
Hi, Bronwyn. Hi, Paul. Yeah, I hope I'm not the guinea pig. Hopefully can set some standards here.
Exactly. You're trailblazing where all the CEOs are concerned in South Africa.
Looking forward.
As far as the sector is concerned, what interests me is, we sit here talking about share prices and whether they're high or not, hot or not, but the reality of running businesses of the scale you do is exceedingly complicated. You're doing deals all the time, you're expanding internationally. I mean, the pharma sector is very exciting, but from your perspective, growth potential, it looks to me to be almost unlimited.
It depends, of course, in which areas you active. Pharma sector in some markets is not great. You have price pressure via the regulators, via the governments. You have generification, where actually prices in average come down. So you have to find niches. And the company we bought recently in Europe is a niche generics player. So they are strong with, let's say, some malaria products, also some antiretroviral products. Yeah. And also from a customer point of view, they go into a kind of a little bit more protected market, which is the relief market. So they go to UNICEF, WHO, Médecins Sans Frontières, or Relief Fund for Palestine refugees. And there are certain hurdles you have to achieve. So you get actually accredited by these relief funds. And this gives a kind of a hurdle for your business. So it's not too much price driven. It's more quality and reliability from the supply chain driven. So you have to find your niches in the pharma market. The general pharma market has price pressure, as you know.
And then what about the so-called nutraceuticals or non-regulated pharmaceutical products?
And specifically, I think it's in the sports nutraceuticals.
Yeah. So in that sports nutrition market in Europe, in general, you see in Europe growth rates of 0 to 1%. That's not exciting. But in that wellness space, sports nutrition, self-medication, OTC, you find some markets which are growing between 5 and 10% in a zero inflation environment. So that's good unit growth. And so from that side, we are quite excited about this nutraceuticals wellness part of our business. And that's why we always say our business is a health and care business. So the care aspect is that holistic part to health of interventive health and preventative health. And you know it when you do your health insurance in South Africa. Adrian Gore talks all the time about his Vitality program, which actually helps people, encourages people to stay healthy. And then with a lot of our products, we're actually doing this. Encourage people to live a healthy lifestyle.
Now, besides the sports nutrition, another relatively unique division is the phyto-vet division within Ascendis Health, which caters for both plants and animals. Is that doing well for you?
Yes, the organic growth of this business is doing very well. We had, of course, one little bit a problem in the last months, was the drought in Southern Africa, which actually our plant business was a little bit suppressed by that. The demand was low, But now we've seen good rainfalls in Zimbabwe again, and we got the first orders in again. So I think from that side, the drought seems to have actually taken away. The problem was also the drought came exactly the time when you build stocks. Whereas last year in September, you built at that time your stocks for the spring season, for the fertilizers, what I call the nutraceuticals for your garden.
But I want to go back to my earlier observation. I mean, you buy a business like Acacia, for example, for like, 300+ million rand. Suddenly you've got a new plant in Isando, you've got a whole lot of new products, you've got a team that used to run that business. How does it actually work? These businesses in Europe, you wander in there, you're writing checks every other couple of weeks.
Are you talking about how does the integration work?
Well, it's more a question of saying, well, you pick a management team and you say, well, look, those guys look good. I'm going to give them some of my capital by buying their shares. But I'm thinking it must be enormously difficult. What kind of businesses are for sale? Are they businesses that are broken or because the manager wants to leave? Why?
Yeah. That's a good point. And Bronwyn, you said a very important word, the integration. You have to work very hard to get the integration right. Now, what is different to us to private equity businesses? In private equity, you buy maybe run-down businesses and you try to improve it. We buy cash flush, positively positioned businesses and theoretically could leave them just like they are, consolidated in, and it will already contribute to the overall normalized headlines earnings per share. But we are trying to bring them in and we're bringing them in and trying to extract a little bit more synergies. I can give you an example. Last week I was in Cyprus, actually the base of the 40,000 square meter plant of Remedica, and I brought together also the Pharma Leader general manager.
How did you find those guys? The Remedica guys. Who knew they were for sale?
Are you wanting to set up a pharmaceutical company?
No, but I'm just trying to
Don't give away your trade secrets, Karsten.
No, I think it's a thing which we tell the market all the time. What is our secret? Our secret is we appeal to entrepreneurs who don't want to let really go of their baby, but want to cash in a part. Picture an entrepreneur. He builds a business, or she builds a business for 40, 50 years. Comes a private equity company, it's slashed in pieces and sold off for a bigger multiple.
And then you're out.
And they are out. And
So
they may
you're
be out
offering
from
them a sustainable partnership, a win-win.
Exactly. We give them an earn-out. We give them an opportunity to participate in the growth of their business for a longer time and keep their entrepreneurial spirit. That's what I always said. What we try to do is stay entrepreneurial with corporate governance. And that is the very important thing. You have to have the right mix of people in your business to actually achieve this entrepreneurial spirit with corporate governance. And there come then the synergies, and there comes actually the extra on the bottom line, what our investors love.
I just want to get one more question in, and going back to the broader pharmaceutical environment, there are many captains of industry in South Africa really beleaguering the operating environment in the country at the moment. Are you finding any negative pressures, specifically in the pharmaceutical sector?
She's always worried about the consumer. Like when I go into Dis-Chem, I've got to fight the people to get down the aisles. So which is it? I mean, is it bad out there?
We've got a tough economic environment in South Africa. I'm afraid we did contract 1.2% in the first quarter of this year.
We see this also in our consumer products. There is more pressure. Whereas 2.5 years or 1.5 years ago, we still could show double-digit organic growth. We are struggling also to get to the double-digit organic growth because the consumer has at the moment some problems. But our products focus on the high-end customer. Call it the Woolworths customer, the high-end customer. The defensive customer who actually, and if you take some sports nutrition guys, they spend 4,000 or 5,000 rand a month for their sports nutrition. And people who actually take care so much for their body, even if the economy is not doing so well or is perceived not to do so well, these people will still spend. And I think that's that resilience of our business model. It's a high-end business model, but of course you have also a lower base, and there you get some pressures, and that's the reason we're not seeing any more double-digit growth.
So it sounds like we're sort of both right, eh?
You're both right. I suppose you support the sports nutrition element of Karsten's business.
But that's the top-line growth. But what happens on the bottom line is actually in what the investor wants to see. And because we integrate these businesses into a bigger agglomeration of Ascendis Health, we can actually extract synergies and show on the bottom line the more than double-digit growth. And that's what works.
I've got one other sort of industry theme question, because we must take advantage of this expertise day to day in the trenches. I was worried about your earlier comment that you think big cap pharma isn't a good space to be, because in our international portfolio, which we're not talking about today, we've got a plan probably to own Amgen, a plan probably to own Johnson & Johnson. And that's because these are big cap businesses, hundreds of billions of dollars of market cap, huge research pipeline, fully exposed to the regulatory pressures you speak of. So do you think those are bad businesses? You wouldn't own them personally?
No, it depends how specialized they are. The more you specialized you are in the pharma sector on a certain niche, the better you are. For example, our Remedica business in Cyprus built for 13 million euros an oncology suite. In oncology, you can still achieve, even in generics, higher margins. Johnson & Johnson, I like personally because they have a very diversified portfolio. Like Bayer Health, for example. Yeah. Bayer Health is also a company who always had plant, animal and human health businesses and for many, many years. And they have been very successful with this. And I believe in this diversification because the moment, let's say, we have some single exit pricing troubles in South Africa because just we can't compensate the imported inflation, we have our consumer brands actually who help us where we can raise prices, being a market leader, having a good brand like Solal or Nimue in the beauty salon market, you can raise your prices. Of course, the consumer, you have to can only do it how much the consumer accepts it, but at least there's no regulator regulating your price levels.
So So it sounds to me like what you're saying is a question of scale. You've got to look specifically at the businesses themselves. It's no easy lunch. There are economies around the world not growing fast.
You need to look for businesses which have a strong moat.
Coming back to your question with the pharma players, we looked at the beginning of a year in a company in the UK, a generics player, but basic generics, and we said no, that business is too risky. We could go into a price spiral. They don't have a good pipeline of new products, so we check carefully what is actually the pipeline in order to integrate it. And then we find now the synergies. Like I said, last week I was at Remedica in Cyprus. I brought the Spanish company together with the Cypriotic, and we are looking already now, 1 month before closing. We're closing end of so 4 weeks. 3 to 4 weeks until closing. We're already looking now for integration and synergy projects, and we have an integration manager, an ex-McKinsey guy, who constantly looks actually on the process to see where can we extract synergies without completely revolutionizing the business, because we shouldn't forget the business are cash flush. They're doing very well, and that's the secret of our acquisition model.
So Karsten, you mentioned investors. I think all investors that have taken a stake in Ascendis have done incredibly well. We put the share price graph up a short while ago. We'll put it up again. And of course, we followed our rights recently. Unfortunately, we didn't have a huge position in Ascendis.
But everybody who participated early likes that one. Yeah, and that's the share chart over the 3 years that it's been listed. It's done
2013 listing.
Yeah, 2013 in November, we had now a rights issue. We wanted to raise 1.2 billion rand, and we got subscriptions of 3.6 billion rand. So it was more than 300% oversubscribed in an environment where we offered to the market on a trailing price an approximately 10% discount. And that shows actually how interested our international and local investors are. And international investors, if you win an IFC, the Investment Finance Corporation subsidiary of the World Bank, with all their due diligence and all their focus on sustainability and labor relations, and you win these guys in a very, very short process. Because I remember when we went to the market, we said, oh, IFC will take too long. But they came on board within 3 months because they liked the story. They want to invest in South Africa at the moment. I think a few years ago they were together with Life. When Life listed, they put in 80-90 million US dollars, Life Healthcare, exactly. And now they put 30 million US dollars into us, and that's the first step, they said, and they want to probably put more in.
So you've got that endorsement from the International Finance Corporation.
Yes, what about one final question, and then I think we're running out of time.
Are we running out of time?
Yeah,
that can't
unfortunately.
Be true.
What about Europe as opposed to here? I mean, we know the South African market, we know its strengths, weaknesses, opportunities, constraints perhaps, but Europe is a huge environment. There's a bit of concern about the EU and Brexit and institutions and growth rates and so on. But for you, if you had to look 5 years hence, do you want to be more in Europe than you are here, or do you want to just be a global player? What's the overall strategic vision?
Our idea is to be a global player. So we're looking also in Australia. Our export initiatives go into developing markets because the growth rates are bigger there. In Europe, we know the growth rates are very low. Only exemption, if you go into the wellness space, even in Europe, the wellness space is still growing nicely. Eastern Europe, Southern Europe. And then, of course, our Remedica business is focusing on developing markets. They are based in Europe, so they give European quality. They have all the bells and whistles from quality, supply chain, but in the end, they go to the developing markets, and that helps a lot.
Your growth has been very acquisitive, in part organic, but as you go forward, do you see that shift taking place where the emphasis will fall to organic over the longer term? Obviously, you're still going to go out right now and do acquisitions.
Yeah, we're looking, for example, at bolt-on acquisitions, but in different areas. For pharma, we probably have found our pharma platform in Europe, and we will look for platforms in the wellness space. We will look for platforms in the phytovet space and in the medical devices space. There we haven't found platforms yet. But first, I think the next 6 months to 9 months, we have to bed down now these 2 acquisitions, integrate them, because we shouldn't forget these 2 acquisitions take us from a market cap of 7 billion, if you fully factored into probably 10, 11 billion rand. So that's not a small acquisition if your normalized turnover is 4 billion and suddenly you add another 3 billion turnover, not to talk about on the bottom line. So from that side, there's integration work to be done, but if you have the right team around yourself, and you remember I talked about this earlier, we have Cliff Sampson on board, who came actually from ex-AVI and Food Corp. very great guy who is doing the operative work. And we have a similar person like Cliff in Europe to actually help with the integration, because I can't be all over the show. I need somebody helping me with the integration, and that's what we're looking at.
So now I'm putting Paul Theron here under pressure. You are sitting
No
next
pressure.
to the CEO of a company that we do hold. Are you hot or not?
Historically, we were hot on Ascendis. We added it to the portfolio, but then we didn't have any money, and so we talked about it. We like Aspen, of course, that's also in the portfolio. One of the reasons for going for a bigger, larger portfolio, apart from the global thing and the local thing being the same value, was so we could do a rebalancing. So what I'm going to do with regard to the Ascendis holding, and that'll be the investment of the day as well, is simply to normalize the position on the new platform.
Which means we're basically going to up our stake.
Yes, but in
Relatively
fact, there's a bit
speaking.
of housekeeping going on here, because we are waiting for the finalization of the following of our rights on the old platform. So we're just going to just bring it all together over time. You know, don't worry, we'll sort out the details.
Well, good news from our hot stocks portfolio perspective. And Karsten, thank you very much.